In the last 3 years, I have used hundreds of ICT concepts, literally all of them that he has put out publicly. I mean, anything you can think of. I've used fair value gaps, breakup structures, OBs, breaker blocks, rejection blocks, daily profiles, weekly profiles, SMT divergences, OTE, premium and discount. I've literally used every single ICT concept in the book. Medusa, Reaper fair value gaps. I've literally used every single ICT concept that you can possibly think of. And in this video, I'm going to be breaking down the top 3 ICT concepts that have made me profitable for the last 3 years. So if you guys have been struggling with ICT concepts and all of these overwhelming concepts that you don't even know much of, hopefully this video clears up some of your overwhelmingness that you guys have probably been feeling from all of the concepts that ICT has out there. So enough of me talking, let's get into the video here and let me show you the top 3 ICT concepts that made me profitable. What is going on, YouTube? Welcome back to another video, and obviously in today's video we are going to be covering the top 3 ICT concepts that has made me profitable for the last 3 years. Now hopefully this video will clear up a lot of the stuff that you guys see online, like you guys see all these different PD arrays by people that just use different stuff. But in this video, I'm going to give you guys my top 3 ICT concepts. So make sure you guys stick around to the end of this video, because the last ICT concept here is a banger and nobody ever talks about it, which is pretty crazy. But the first ICT concept that has made me profitable for the last 3 years is just the good old fair value gap. Now if you guys have not seen the past video that I just uploaded, the video prior to this one about the important fair value gap, but let me go ahead and break it down to you on why it's such a good ICT concept. And again, these are not going to be in order from top to bottom or bottom to top. This is just the top 3 in my opinion. But the last one is crazy. Like I said, stick to the end of the video so you guys can see that. But the good old fair value gap, right? Why is it so important? Well, if you guys haven't seen my last video, I recommend you guys go watch it. But these fair value gaps that actually have a purpose, right? That actually serve a purpose. Like for example, we sweep out these relative equal highs, we break through it, and at the same time, we form a fair value gap after breaking through it. So once this candle closes here, we form a fair value gap. Now, most of the time, if you guys do not know, smart money will refer back down to these gaps to get their orders. It's like a form of drawing liquidity, or you could use it as a form of liquidity. It's considered internal liquidity. So smart money usually refers back down to these gaps to continue the trend or continue the move that's happening on the higher time frames, or whatever time frame you're really looking at, to be honest. But fair value gaps are a continuation PD array, right? They are a continuation concept, and they work very, very well if you know how to use them. For example, again, this fair value gap here forms after breaking all of these highs here. We close above it, and you can see how price action comes right back down to it. It taps into it, and then it leaves it. It runs away again, right? Now, same thing for this fair value gap right here, right? This fair value gap forms after what? After breaking this recent high where the retracement started to tap into this fair value gap. So this fair value gap that forms right here after sweeping this high is considered, in my opinion, I like to call these the important fair value gaps, because they actually serve a purpose. And if the trend is going to continue higher, then this fair value gap right here needs to hold. That's why it's very important for it to hold, to continue the trend. All right, it needs to continue the trend. So these fair value gaps actually serve a purpose of sweeping a high or breaking through a high like this. They need to hold if price refers back down to them. Now, sometimes you won't always get a retracement back down into this fair value gap. Sometimes price leaves it, right? But if it does come back down to it where it broke the highs, then it needs to respect it. And now you might be wondering, okay, well, this little fair value gap here, this bearish one, right? This one, I mean, same situation. We're looking at it with the same logic, right? So we're looking at this fair value gap because it broke through these lows right here, these relative equal lows, right? And it's also tapping into this older bullish fair value gap. Now, if you're just looking at this chart here, just using fair value gaps, where do you think price is trying to go? Where do you think it's trying to reach to? Just based off higher time frame liquidity. It's trying to reach up into these relative equal highs, right? So it doesn't really make sense for price to reverse at this point by leaving these relative equal highs up here, a very nice liquidity pool, right? So it doesn't make sense for price to reverse right here. So once we get a drop lower, yes, you could look for continuation, but you're playing the retracement rather than playing the expansion up to these relative equal highs and up to this buy side level here. So this fair value gap, again, does become an important fair value gap. So if you are bearish, if you're looking for bearish continuation to the downside, then this fair value gap here that broke through these lows needs to hold. Okay, it needs to hold. So you can see it taps it, retraces, but then we close above. So at what point do I get rid of these fair value gaps on my chart? So for example, this bearish fair value gap here, I would get rid of it once it closes a body above it. So once it closes a body above it, it theoretically inverses that fair value gap, and you could use this as an inverse fair value gap to target this high. And you can see how beautifully it does that. It comes back, respects it, and then it pushes right up to these relative equal highs, which is this high relative to that high, and then it goes up to the main buy side up here, this main swing high, right? And then it sweeps it all out right there. And again, I mean, the same logic applies here. The important fair value gap forms after sweeping that swing high right there. So we have a fair value gap here. Now you can see how price pretty much retaps it here, and then it ends up ripping even more. All right, so now that you guys know one of my top 3 ICT concepts, here is the second one, and by far the second one has been an absolute game changer. I remember when I first learned about it, it was just an absolute game changer. This is probably the concept that really made me super profitable. And this is called the CISD, which stands for Change in the State of Delivery. All right, so what is a CISD? Let's jump onto the chart so I can actually show you what I'm talking about here. All right, so a CISD can form one of 2 ways. You're either going to have a series of down close candles or up close candles, just like this here, or you're going to have a singular candle. Okay, and I'll show you what that looks like here in a bit after I explain the series of down close candles or up close candles. And if you guys want to watch a video that I did on every single concept talked about in this video, the links for those videos will be down in the description below if you want to go more in depth and actually learn what each and every single one of them are, and look at examples and all that good stuff, because I made videos for every single one of these concepts that I'm explaining in this video already on my channel, but I'm just reiterating these as my top 3 ICT concepts that has made me profitable for the last 3 years. So if you guys want to find those videos, if you guys want more in-depth explanations, the videos will be down in the description below. Anyways, the series of down close candles, your change in the state of delivery is going to come in once we close a body up above the first down close candle in this series of down close candles. It can also be up close candles, but I will explain what makes a change in delivery more high probability than just, you know, pattern trading the CISD. Because what a CISD is basically the market going from a sell program back up into a buy program, right? That's literally all it is, and vice versa. But what makes the CISD a lot more high probability if it's actually tapping into a higher time frame PDR rate, right? Using time frame alignment. Now, again, I explained this in the CISD video. I've explained this in multiple of my recent videos. Again, if you guys want to go see what time frame alignment is, you guys can go watch it. But for example, let's say we tap into a daily PDR right here, right? Let's say we're tapping into some daily fair value gap, a daily order block, something like that, right? And then we get a change in the state of delivery here. Okay, so this right here would be your change in the state of delivery once we get a candle closure above the opening price of this first down close candle in the series of down close candles. All right, so once we get that, you could theoretically just market enter and aim for your objective. But since we're on the 1 hour time frame, you could scale down to the 5 minute, the 1 minute, the 15 minute, and look for an intraday entry to the upside, right? Because now you got confirmation out of this daily POI that you are changing delivery. You got a candle closure here. This is the market switching back to a buy program. And you can see how the market kind of comes back lower. As long as it doesn't get back below this low here, this change in the state of delivery is valid, okay? And you can see, I mean, it refers back to it here. It sweeps liquidity here in the New York session, and the next day just ends up pushing up very beautifully. Now, here is another CISD, just like I wanted to explain. This is how the other CISD could form. So it's going to be a singular up close or down close candle. So once the next candle closes a body below the opening price of this candle, then that is a change in state delivery. You guys probably know this as order blocks, and this is basically an order block formation, right? This is a lot lower risk than the other one, because the other one, if we go back to this example down here, I mean, you have a lot of room for error, or you have a lot of, you know, drawdown that you have to work with your stop loss, because this is quite a bit, right? If you were to market enter here, I mean, your stop would probably be like somewhere down here or down here, versus something like this. If we were looking at a singular up close or down close candle that swept liquidity and ideally tapped into a higher time frame PDR, this is your order block and this is your low risk sell. So if you were to sell right here once the next candle that opened was to tap into that order block, then, you know, compare this stop loss. Obviously, you know, this is just an example, but compare this stop to the other one that I just showed you, and you would aim for, you know, whatever low, right? So this is your order block, and this is another way that a change in the state of delivery can form, right? It's a singular candle here that sweeps liquidity or taps into a higher time from PDR, and then the following candle closes below or above the opening price of that singular candle that, again, tapped into a higher time from PDR or swept liquidity, just like this example here. here. Now, before we jump into the next concept that I'm going to show you guys in this video, I just want to explain the difference between breakup structure and change in the state of delivery, because some of you guys in the comments from, you know, my previous videos have always said, well, this is the same thing as a breakup structure, right? Wrong. Well, a breakup structure is going to be something like this, right? The last low that produced that last higher high, once we break through it, that is a breakup structure. A CISD doesn't necessarily require a breakup structure. It just needs a closure below or above the opening price of the singular down close or up close candle, or in the series of up close or down close candles. For example, again, right? Let's say we have the same example here, but our breakup structure is all the way up here. And let's say that, you know, in this price leg, we have a singular candle that swept liquidity. We close below the opening price here, but the breakup structure is all the way down here. That is a change in the state of delivery. So this is your low risk short in this example. And then obviously you would get in on that order block, which again is confirming that it is changing delivery based off some other things. And now, like I said, if you guys want to go study CISD a lot more in depth, I have a whole video explaining CISD in depth. It will be in the link down in the description below. CISD was definitely a game changer for me whenever I learned it and I started implementing it into my strategies and building a strategy around it. But the last and final strategy that really made me just go crazy and make a ton of money with trading is this concept right here. And if you guessed it right, it is daily profiles, right? Market profiling, which a lot of educators do not talk about for whatever reason. Now I'm going to break down these daily profiles, and again, same thing for all of these concepts I already talked about in this video. If you guys want a more in-depth lesson on these, on every single example, you guys can go check out my YouTube video on daily profiles. I made a whole dedicated video to it down in the description below. All right, so for daily profiles, there's about 4 daily profiles that we can utilize and use, but in this video, we're only gonna be talking about 2 because as of recent, there's only been 2 daily profiles that really print every single day. And the first one is going to be a classic daily buy profile and a classic daily sell profile. Now this means that it's going to be a London smart money reversal and a New York continuation and expansion. These daily profiles, these daily candles, these days right here are the expansion days, right? This is where price trends. This is where price is super clean. And the reason for that is because if we just look over here to the left on the classic daily buy profile, you can see that I have written down here, the London smart money reversal is going to come in from 2 to 5 a.m. Eastern Standard Time. Now this is when the London kill zone actually starts, right? This is the times that we want to pay attention to for London. So from 2 to 5, what I'm looking for is a 1 hour or higher tap of a key level or PD array, right? Key levels can also be previous day lows, previous week lows, previous month lows. And if we tap into a 1 hour or higher PD array in between the hours from 2 to 5 a.m. Eastern Standard Time, then we can expect New York to continue and expand to the daily objective or whatever draw on liquidity that we're looking at. We can expect that daily candle to push higher and expand during the New York session. And then we can expect that low that came in London in between the hours from 2 to 5 is going to be the true low of day. Vice versa with the bearish expansion candle, right? That classic daily sell profile. We want to see a tap into a 1 hour higher PD array or sweep of a key level, again, which can be previous day high, previous week high, previous month high, in between the hours from 2 to 5 a.m. Now, if you're looking at these key levels, the previous day highs, previous week highs, previous month highs, ideally you want an SMT occurring at those key levels, right? But if not, you're looking for a 1 hour or higher PD array, such as a fair value gap, an order block, a breaker block, something like that. Now, you're going to be looking for the high to form in between 2 to 5 a.m. Eastern Standard Time as well. And then you're expecting New York to continue and go lower, right? This is a London expansion, New York continuation, and this turns into a classic daily sell profile. Now, it's very important to note as well is that you can use the same logic with the Asia session. Now, if the Asia session is tapping into a 1 hour higher PD array to sponsor the move going into London and New York, then you can expect it to expand. Now, usually if you get the Asia session tap into a 1 hour higher PD array or key level, you will see a pretty violent move in London and New York. Those are really, really big expansion days, especially if that true low of day or high of day comes in during the Asia session. It's going to be a pretty big day. All right, so for the next daily profile that we're going to be talking about here in this video is going to be the London Judas and New York reversal daily profile. Now this profile is similar to the other one that I just showed you guys, But this time you have to pay attention to if in between those times, if we tapped into a 1 hour or higher PDA rate, or if we swept any key levels, right? And if we didn't, then we can expect that high of day or low of day, those temporary low of days or high days, to be the fake high of day or fake low of day for that day. Most of the time you'll see Asia pushing up into it for a bullish one, and we'll make a fake high of day, and then going into New York, that's when we get that 1 hour or higher PDA rate tap, and that's where we get the change in the state of delivery. That's where we get those true fair value gaps, and then it expands to our daily objective or draw on liquidity that we have for that day. Same thing for the bearish one, right? We make a fake low of day in between the hours from 2 to 5. Most of the time Asia will push us down into that. There's no sponsorship going into New York. People think this is where retail gets trapped into thinking that this is going to be a buy day, right? Because we get the break of structure, we get everything, right? But they don't realize that smart money is pretty much accumulating short positions for this day, because again, the low of day that comes in London is a fake low of day if it didn't use a 1 hour or higher PDA rate to sponsor this move going into New York, right? It's just like, if this happens, then I do that. If that happens, then I do that. That's what these daily profiles are basically telling you, right? If this happens, then do that. If that happens, then watch this, right? In between the hours from 7 and 10, you're going to look for a key level tap or a 1 hour or higher PDA rate tap. And then you're going to look for that fake low of day, right? That'd be your first target. And if you have any other daily objectives or drawn liquidities that you're aiming for on the higher time frames, then you would obviously take runners or take a trade to that. That's going to be the daily profiles that I'm going to share with you in this video. And if you guys want more information on daily profiles, again, that video will be in the description down below. But yeah, that's going to be my top 3 ICT concepts that has made me profitable in the last 3 years and has helped me achieve over $500,000 in prop firm payouts. Absolutely insane. I've recently opened up my one-on-one mentorship. If you guys want to book a strategy call with me or my team, you guys can book it with the first link down in the description. In this call, we can go over any questions you guys may have on any of these concepts that were shared in this video. And we can also go over how to build your model, how to tackle your psychology problems, how to really become profitable this year. So that way you can stop daydreaming about becoming profitable and actually fucking become profitable. So if you guys want to book your 30-minute strategy call down below, it is going to be the first link in the description down below. And again, if you guys want a more in-depth lesson on any of these concepts here, I will have videos for each and every single one of them down in the description below as well. Hopefully you guys enjoyed this video. If you guys did, leave me a like, subscribe. It really helps the channel out, and I will catch you guys in the next one. Peace.